Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, November the 4th, 2016, and this is the Daily Report for Gold and Silver, our weekend review in which we combine it with trending markets to take a look at activity this week in the markets overall, as well as our forecast for next week. Stellar performance in the precious metals market, specifically gold. Accelerating a price move which began last week at roughly $12.77. It looks like it's going to close out the week up a couple of dollars at $13.06. Of course, we do have long positions from approximately $12.60 with stops in place. We will talk about that in detail as we pull up our first gold chart, but let's take a look at the week's activity. As I said, gold trading up. High today, 1308.30. That is important because that is our peg resistance, and we've got a low of 1295.70. As I said, closing up about $3 on the day at 1306.10. When we look at silver, silver has really been a difficult read in that it has had some extreme volatility. It is going to close off on the day. This is COMEX futures, of course, in essence unchanged at about 1840. The low on the day has been 1818 with a high of 1848. So we're just about 8 cents off of the lows on the day. Quick look in terms of spot 1305 in gold and 1839 in silver. Absolutely no doubt we have seen gold in a stellar performance this week. Consider the following. A gold opened basically on Monday at around 1277, and that is the bottom of this particular candle. We are looking at a weekly candlestick chart. You can see the open right here. And in terms of the close, we're currently trading at 1303. Market is set to close in a couple of hours, but I really don't see it moving that much higher or lower as we go into settlement. I certainly could be wrong. When we look at this chart, before we actually take these side plates away, I just want to kind of go over them very quickly. Upper left-hand side, this is the commodity channel index. We can absolutely see that as this market bottomed, and of course it bottomed, what, about mid-October, right here at 1250, you can see this defined turnaround in the CCI, and you can see that it has moved up substantially. At this point, it is waning just a little bit. However, I still believe that we are in positive territory, meaning I believe that that will continue to move higher. The second chart that we'll look at before we go to the plate behind it is a simple moving average. We'll talk about that on this weekly, but these are dailies, and the MACD, moving average, convergence, divergence. You can see that they're definitely moving apart. We got the cross roughly at the same time as we saw the CCI turn around. And now we can really focus on the weekly chart to give us kind of the big picture of what we're looking at. Of course, the week's activity we've just talked about. Stellar week. You can see that although the last 3 weeks we have seen gold closing strongly higher on the week, this week, of course, has been the most exceptional week in terms of the range. However, we have run into a little bit of resistance on a technical basis. Of course, this market is really being fundamentally driven as a safe haven asset going into the election. But if you take a look at a couple of fib levels that we have, the first level is from roughly the low this year at, call it 1050, to the high at 1375. When we do that, a 38% retracement takes us up to 1350. Which turned out to be the bottom. Of course, we went long in this market roughly at 1260. We did that on October 13th. We are still holding those positions with stop in place. There are some of our subscribers that pulled profits at around 1288. They have all been advised and are back in the market, so that will remain long going into the weekend and especially on Monday. My sense is that as long as this election next week is perceived as a tight race and the potential outcome has any possibility of Trump winning, we're going to see gold bid up. I also believe that if and when Hillary Clinton is elected, we will see a little bit of premium kind of get washed out of the market. So we want to be cautious about that being a long player in the market. Now, So we absolutely had good support here. But if you take a look at the second retracement, which really begins at, call it 1200, up to the same top, when we do that, you have a 38% retracement at 1307, 1308. That also corresponds, if you take a look at these lows that came in, you'd really see it on a daily, but you can absolutely see it on a weekly. The fact that you had this be an incredibly supportive area for gold right in here, and to some degree right here, and right here, that this is a mark that we could not take out this week. The highs have consistently been, yesterday was about 1309. Today the high has been about 1308. So they've consistently been up in this area, but we haven't been able to breach this particular price point. That is the target. We need to see it excel above. If that's the case early in the week, 1334, that would be our next target, and that is the 23% retracement of this shorter fib retracement sequence. So traders, as we get closer to the close today, you can see that gold is bid up a little bit, currently trading at 1305.20. That is, of course, off the high of 1308, and we acknowledge resistance in this area. But my recommendation is obviously to maintain our current long position that we initiated roughly at 1260, and to maintain our current stop level. As far as silver goes, as you know, we have been sidelined up till recently in silver. We base that upon this following trend line that you can see I've just kind of highlighted. And this trend line is simply created from attaching these series of lows and then, of course, extending it forward. We had that hard break below this particular line, which was a former support line. It then became resistance. You can see all of these tops here. However, once the market broke above this particular price point and the 28-day moving average, I did tell subscribers that you could add silver to your positions if you're a silver trader. And my recommendation is that as long as it maintains a price point above this trend line, that it can be an active long trade. However, any break back below this, and that would be an exit point, obviously, in silver. Silver has been acting not in an erratic manner, but you can see that these highs and lows, especially yesterday, have been pretty extreme, and we could definitely expect some volatility to continue in silver. Also, very, very noteworthy was the fact that we have a continuation of the sell-off in U.S. equities. In fact, Standard & Poor's closing fractionally lower, down about 3 points. But the big news with the Standard & Poor's is we are now looking at the 9th consecutive day of lower pricing. And according to the analysts, that is the worst performance in 36 years since about 1980. So we do have this market trading dramatically lower on the week as well as the day. Now, as far as equities go, there's absolutely no question when we look at a chart that this market has been under pressure for the better part of this week. We're looking at a daily chart, but of real key importance are these two moving averages. This lower straight line, or dashed line, I should say, is our 200-day moving average, and this upper dashed line is our 50-day moving average. We absolutely broke through that. We did that a couple of weeks ago, but not until today have we actually tested the 200-day moving average, and that's that long-term moving average that, if broken, could signal dramatically lower pricing. So we want to be very, very cautious and take a look at this come Monday to see if, in fact, this particular price point will hold on the Standard & Poor's 500. With the election coming up, it could be a volatile week filled with fireworks. Dollar index just absolutely devastated through the week. You can see that on this weekly chart right here. But the dollar index is at 96.93, closing off almost 0.25% and losing about 22 points on the day. The low has been 93.20, so we're closing right near the lows and the high, 97.35. Of course, recent activity in the precious metals markets, specifically gold, has had a huge push from a weakening U.S. dollar. U.S. dollar, as we said today, is down about 0.2%, 96.99, and you can absolutely see on this daily chart, we'll convert it in a second, what kind of drawdowns we have seen over this last week. Of course, this is Monday, which was the only green candle that we saw, but even with that, you did have a lower high and the market closed near the lows of the prior day. It was all lower ever since that. And traders, you can really see how the market, the bottom dropped out of the dollar index this week. I've converted that chart to a weekly chart, and look at the drawdown that we saw on the dollar index as it moved through this week. Currently, as I said, at 97.04. And on a technical basis, we don't have any kind of real support until about 96.70. And then major support, I believe, in the dollar index comes in at around 96.31. Of course, depending on the perception over the weekend of how close or not close this election will be, is going to really be a motivating factor in what we see the dollar do next week. But all things being equal, we could see the market continue to trade lower, at least, as I said, to about 96.70. And lastly, do want to take a look at oil. Oil losing over 10% of its value this week, absolutely falling out of bed below 45 at 44.17. As we said when we looked at the dollar index, it absolutely affects the price of precious metals as well as crude oil, because both of those commodities are paired with U.S. dollars. However, even a weakening U.S. dollar could not stop the tremendous sell-off that we have seen in oil throughout the week. Of course, it broke early in the week through this linear regression, which I called bullish channel lines, as the market was moving up. As you know, we went on record stating that the market would trade or top between 50 and 52. It certainly did that. From there, we've had different levels. Our latest level was a 61% retracement at 43.95. I put that out yesterday, but the market is now at 44.12. So the question is whether or not crude oil can hold these prices through the end of the week. If we get the market drifting lower, our refined and defined target will now go to $43, and it's based upon these series of lows that we had, which were supportive in the market, historically speaking, and not a fib retracement. The next fib retracement level, of course, wouldn't come in till about 41.87. So as we wrap up this week and get ready for next week, a couple of things are absolutely evident. As we talked about, a stellar performance in gold. Gold finishing up strongly on the week, moderately on the day, closing out at about 1305, 1306. It is therefore our recommendation that you maintain your current long position as well as your stop. We're going to need to watch this very closely, especially on Monday, because if sentiment is really weighed towards the potential of Hillary Clinton being nominated, which is what is expected, we could see a lot of premium drop out of gold, and we certainly want to capture as much profits as possible. Of course, anything is possible, and that uncertainty is what has really fueled gold over this week. This has been Gary Wagner, wishing you, as always, good trading. We certainly got that this week. We will talk to you on Monday for another daily update and review, and talk about the fireworks ahead. Have a great weekend. Bye-bye.